All right, what is up, YouTube? This is definitely part two of how to invest and trade with a budget. Now, I know a lot of budget investors and traders are definitely going to say, okay, how exactly can I flip my money, or how can I make thousands of dollars in the stock market? First, you want to take those small steps, and then we can think big, right? Because not a lot of people actually do make money in the stock market. I know there's a lot of misconceptions because of YouTube and because of people showing pictures of them making money. But typically, you need a lot of money to make a lot of money, if that makes sense. Now, there are rare instances where people, put in $500 and probably come out with 2 grand. But what they do with what they do with it after that is definitely questionable. So we want to pay attention to how can we have sustainable growth in our account. One way we can definitely do it is buy things that we like or buy things that we know about. Now, I know a lot of people, you're thinking, what can I buy, or what is, cheap for me to buy that I can afford at the moment. So if if you like Apple, you like Amazon, you like Netflix, you like all those, right? Apple is over $100, or I think about 140. Let's see right here. Apple is trading at 142. Amazon trading at $800, almost $900 just about. And Netflix is trading at just about, I think, 140 as well. Now, one way you can go ahead and actually buy all these stocks without having to play over, $1,000, as you've seen with Amazon totaling over, $900, is definitely buying the XLK. That is the technology sector with the, with those ETFs that I did talk about in the last video. Now, with those ETFs, like I said, they definitely give you a broad-based investing mindset, and they also give you returns over time. Now, they do give you minimized risk, so it is low volatility, but at the same time, you won't have that exposure that you're looking for. So if you're looking for, that Apple return, you're looking for that 89 to 145 type of percentage return, it definitely does not give you that. But it does give you, it definitely does give you a broad-based investment. So, when Apple stock is down, Amazon might carry this ETF for the day. So it depends on how they're weighted. So we want to check, we want to do research and see, how much is Apple weighing in this sector, how much is Google weighing in the sector, how much is Amazon, and so forth and so forth. Now, when you know that's very important, because it doesn't provide you with that risk. So if Apple does bad on a quarter, you're definitely not going to see it in your account. You might see, the this stock right here, the XLK, it might shrug off. We might see a 11-cent loss for the day, but at the same time, we don't have that, that single stock or that individual stock exposure. If you don't want that individual stock exposure, that is definitely fine. But if you want to be a part of Apple, to collect those dividends, that is definitely one way to go ahead, and play that stock. If you're looking for that dividend, and if you're looking for, to buy your first share and make it an Apple, you can definitely do that. But if you want to buy a broad-based investing for less than $60, it definitely gives you exposure to Amazon, Netflix, Google, Apple, the list goes on. This is definitely one way for you. So I'm definitely looking out for the people that trade with less than, $50 or less than $100. The stock is over 50. So who trade with less than $50? This is definitely one stock that you might want to buy for long term, because you see the potential, you see exactly what stocks this holds, and you think that all those stocks are going to go up over time. This is definitely an investment for you, right? So let's say we like oil, and this is what I know Exxon, Chevron, and other oil producers are definitely in this sector, or in this ETF is what we're referring it to, because as you see, there's a way to eliminate single stock risk exposure pretty much, and that is definitely buying this sector. So we see oil is definitely topping out, and oil, it's going down once again. The way to limit your exposure is definitely to play a sector ETF rather than having a stock in your portfolio. So we see Chesapeake come with the huge swings. I did plot the bottom and top. We did see a breakout of that range. Like I said, that is definitely the time for you to buy. And we see a double bottom forming here and breaking out to the upside. We could not break past that resistance level, so you did see it get checked down. And not to mention, oil prices are showing that they're going to go lower, and at some point we will see 40, 48, 47, depending on how fast we can get there. And we see that the daily moving average, now let me break this down. The daily moving average is that, the daily moving average is definitely average price points, at a specific time. So let's say, we see $3 here, $4 here, and pretty much it's just the average, and it's just telling you where the stock should be at that given time. And it measures the buyers and sellers, right? So if the stock is trading above the line, that's letting us know that there are a lot of buyers in the stock, and the stock will soon come down below those levels. Now, if it trades below the line, that lets us know that sellers are in charge of the stock, and it lets us know also that the stock is trading at a discount relative to the daily moving average. So I think this daily moving average is the 28-day, just about, the 28-day. So, and we go off of close prices instead of, market open. I'm assuming here we see the DMA. That's what that stands for, the daily moving average. We can look it up on Investopedia if you want to get a better understanding about the daily moving average. But that's one way to understand the patterns that we see in these charts. But we want to make sure that we have a daily moving average set up in our chart, so that way we can measure the buyers and sellers. Now, you're going to ask me, what are these three indicators that I have here? This measures volume. So this measures how many stock or how many shares have been traded on that given day or on that given week. So we see, hundreds of millions have been traded, throughout the year. And this right here, the RSI, Relative Strength Index, we can look it up on Investopedia. And this lets us know where the buyers and sellers are for the stock. And as you see, what you notice here is that it paints a perfect picture to the stock chart. So we see sellers right here bringing the stock down, buyers coming back up, bringing the stock price back up. And as we see here, the red meaning, it's time to get out, or usually it might mean a momentum trade. And we're going to get into that when I show you Apple. So the red is showing that it's overbought. So that means that, it's a crowded trade. Too many buyers are stepping in and buying the stock. I know you're saying, okay, buyers are stepping in, that's good. But at some point, there has to be a signal in your head that makes you say, okay, too many buyers, crowded trade, let's get out and let's reload at another price. Now, when the stock comes back down again, it becomes close to oversold levels. So it lets us know that, buying and selling is definitely driving the price up, and that's typically how the stocks move. Buying and selling is driving prices up. There's no imaginary, there's no body, putting stock prices where they think they should be. These are definitely market influence, so investor influence type of price moves here. So we will definitely get into the technical analysis later, but I thought I should just let you guys know or further elaborate on the tools that I do have here. And the Chaikin oscillator definitely lets us know where the buyers and sellers are as well, but it definitely doesn't measure them. Now, the RSI paints a perfect picture. I would say, well, hold on. I would say the RSI kind of gives us an accurate picture of where the buyers and sellers are. The Chaikin oscillator is just a backup plan. So if we think that, sellers are still coming through Chaikin oscillator, we can check with the Chaikin oscillator, and that'll definitely, verify what's going on. Now, there are some times where stocks, the stocks don't correlate with the RSI and the Chaikin oscillator, but they do, no matter what, the stock is always going to correlate with the daily moving average. So we have three different indicators here, or four, if you pay attention to volume, we have four different indicators here, and, you need to be aware of all of them. I know a lot of people, they don't use these indicators, but these are the indicators that help me win or become successful on my trades. So if we wanted to add more studies or learn about more studies, we can definitely use this right here. And this is TD Ameritrade's Think or Swim platform. And this definitely gives you, every single thing that you do need, if you want to be a successful trader. We see that, it provides a lot of tools for you to profit. Let's see here, volatility studies. We want to study volatility here. We wanted to add some more things into our chart price. And I definitely don't want to add any more things right here because it'll knock my news out. And I definitely need the news. Just in case I want to invest in a stock, I want to make sure that I'm paying attention to the news that does come out. So we see, we broke down stock price. This is the candlestick chart. Daily moving average is that purple line that you do see. The low price is letting you know what the lowest it was for the year so far, and the high is letting us know what the high was for this year chart that we see here. And as we see a resistance level. This is what we call resistance level in charting, because we see that the stock price has tried to get at this level and definitely fell back down. And those definitely do play a huge role in trading stocks. So if you want to trade stocks, these are the type of things that you must understand if you want to trade, because they'll definitely kill you if you do not understand anything that I'm talking about right now. So you want to understand every single thing that I'm talking about, every single thing that I'm referring to, or if you don't understand it, we definitely want to be good at it. So Google it, use Investopedia, definitely do your research on it so that way we can understand. Now, if you're thinking about investing in penny stocks because you do have a low account, we definitely don't want to do that. We definitely don't want to force all of our money into a high volatile situation to where we're risking our money to where it's losing money just about, or we have a 50-50 shot of losing our money. So this is Snapchat. We see Snapchat, horrible company, definitely going to get taken out later on, and it's just a matter of time before they report earnings and they show that they have taken a loss, or not showing really any progress to the stock. So a lot of people they want to jump in Snapchat because that's a name that they know, that's a name that people use all the time, but Snapchat has been profitable. So I know you feel emotionally attached to Snapchat and you feel like this is an investment that you should go ahead and make. But at the same time, we have to put our investor hat on, and we must understand the technicals, we must understand the balance sheets, and we must understand the financials. Because if we do not understand the financials, we will be the people buying right here at that 294 and not even breaking even for a while. And who knows where the stock is going. But we make sure we want to do our research. We definitely want to take some time out. I know you see the IPO was definitely successful at the beginning, but we see the stock is the stock came down, and that's typically that's that's a discount. Now it's because the IPO opened at like $23, and now it's below 20 or IPO price. It wasn't. It's still above IPO listing price of $17, but it's definitely above the IPO trading price. So let's see here. Let's give another stock. Twilio is another one. So Twilio is definitely one stock. We have a trend line here, and I made sure I drew that for you guys. We see a trend line. This is an upward trend line, and a downward trend line is typically, I'll go ahead and show you that one. But an upward trend line is just this right here. We see that there's an imaginary line keeping this stock up, no matter, it goes down, but it still bounces back up. And after, the stock does break down, what we say is a breakdown in the end, or when we use technical analysis, is whenever this trend line is broken, and when the stock goes below that trend line, that's when the trend is broken. And we can see exactly what I mean, because the stock kept falling back down, and that's just we can plot a perfect downward trend. But I'll go ahead and show you another one. So this is what a downward trend line looks like. This is the retail sector, and we see no matter what, the stock kept trying to break out of the level, and it could not, forcing the price down. So we want to understand technical analysis if you want to go into that trader mindset with your small account, because I know a lot of people, they're looking for those small penny stocks because they're looking for those high volatile gains. But if you do not understand the technical analysis, I suggest you do not trade those, because they will definitely kill you in the long run, because you want to understand where the stock is going and the daily moving average relative to the stock the stock price that you're trading it at. So that's all I have for you guys. If you're looking for investments, we want to read. Reading is very key. If we want to look for investments, reading is super key. Like I said, if you want to make money in this market, it's definitely with long-term investments rather than short-term. Short-term is definitely just something you can use to build up your funds for long-term. So I'm definitely a better long-term trader than I am a short-term trader. So you just got to find your niche in the market to understand where stocks are going. So that's all I have for you guys. Take care. We'll definitely get more into placing live orders, and I'll show you guys exactly what I mean. But like I said, trading with those discounts, that is something that we want to watch out for, because we don't want to trade any stocks that are high volatile, because that means that there's a possibility that we might lose all our money. So like I said, it's been good. Take care.